Well, let's talk now to Matt Maley, Chief Market Strategist at Maley Tabak in Boston. Good to see you again, Matt. Welcome back to the programme. We have got quite a few big banks to talk about. We'll break them down in a minute, but let's talk about the broader theme, which is that they've all done better than expected.
Yes, this is particularly impressive. I mean, one part of it is a little bit understandable. I mean, the trading revenues were better than expected, and given how strong the market has been, that's not a surprise. And same with Morgan Stanley. Some of their wealth management numbers were much better than expected. Again, with the market doing so well, that was not a surprise. But the investment banking revenues, I mean, a lot of people really felt that would dip because of the government shutdown here in the U.S., at the end of last year. And yet they were still able to come in better than expected. So this is something that's definitely helping the entire group, although some of the companies with the credit card related issues are not rallying quite as much.
Well, you mentioned Morgan Stanley and their wealth management division, which it looks like is generating a lot of their money. What else is working for Morgan Stanley?
Well, again, that investment banking area. I mean, you think of Goldman Sachs and Morgan Stanley, and they have been at the top of the investment banking industry for decades, really. And there was a time for a while there that Morgan Stanley was losing a little bit of its cachet in that area, but it's coming back in a big way because people thought, well, they're focusing so much on wealth management that they're losing a little bit on the investment banking side. Well, that's no longer the case. If it ever was the case, it's certainly not being proven to be wrong now. So these are all positive things coming together for the stock.
So Goldman Sachs rather also beating expectations. Why do you think people weren't expecting them to do as well as they've done?
Well, I mean, to be honest with you, I was surprised. I mean, that people were a little bit cautious on this name. They've made a lot of right moves. I mean, remember what they did in that wealth management area of the mid sector. They got into that. It didn't work out for them, and they got out. I mean, that was a smart move. And so the overall factor, though, is that they're still at the top when it comes to trading. They're still at the top when it comes to investment banking, along with Morgan Stanley. And so these things have come together quite nicely. And the whole banking sector, it's funny, the KBE Bank ETF, it actually is making a new all-time high. People forget that its all-time high was way back in 2007. We're just starting to get above that now. If it pushes higher from here, that's going to attract a lot of that momentum money. So this could be a real good group over the coming months.
We should talk about BlackRock as well, which now has a record $14 trillion in assets. Is that down to it broadening out its business, do you think?
Yeah, it definitely seems to be part of they're broadening out into the private markets, especially the private credit markets. I mean, there's definitely some risks involved there. So if we do see any kind of a breakdown in the fixed income market, and we do have to note that, long-term interest rates in many parts of the globe, especially in Japan, but also here in the U.S., they're if anything, moving higher in the last couple of months. So that could create some problems down the road. But yeah, they've been able to broaden out. I'm a little bit worried about some of the risks that may be involved at some point when those private markets see a hiccup of some sort.
I want to briefly touch on that oil price, which has been a bit up and down, hasn't it? Highs yesterday, falling back on Thursday. Geopolitics must be having an effect, of course. Where do you see oil prices going next?
Yeah, the thing about it's funny because I tend to be, bullish on the energy stocks. But a lot of that has to do with the cost cutting and things they've done. In other words, they can do well even if oil prices don't rally in a big way. And so I still like the group. However, for the price of oil, I mean, we have to remember that President Trump, when he makes a move militarily, he wants a quick strike operation. We certainly saw that the first time the U.S. hit Iran, and then, of course, with the most recent developments in Venezuela. And so, we're thinking that we're going to have some sort of a boots on the ground, a big problem there, I think is a little bit stretched. So I think oil prices will stay subdued. The one caveat, of course, is that if the situation in Iran really deteriorates and we have chaos there, all bets are off. So we have to stay very nimble when it comes to this area of the market.
Matt, great talking to you as always. Thanks for coming back on the programme. That's Matt Maley from Maley Tabak in Boston.